Hey traders, John Fortune here with this week's weekly Forex forecast for the 7th of January to the 11th of January 2019. Of course, the first forecast of the year. I hope you all had a nice break. I hope you all rested well. Looking forward to the new trading year. I certainly am. What we're going to do, as always, we're going to start off by looking at the US dollar index and oil, and then we're going to run through a number of pairs, looking at the key levels of support and resistance in the process. And we're going to be highlighting some of the targets that we're going to be looking for in the coming week and also in the weeks ahead. So let's jump over to the charts and see where the money is this week. As always, we're going to start off with the US dollar index. Now, we start the week below a key area of broken support, turned resistance from the past at the 97.20. As we start the week below this key area of broken support, turning resistance, we are looking further declines to the downside in the US dollar index as the high probability move going into next week. You can see there is always a chance that we get to pull back and a retest of the 97.20, but we have been respecting this trend line to the downside, so there is a very good chance we could actually start to decline from where we are going into next week. We're going to be looking first of all to the downside. Next key area of support to the downside, the 95.37. And following a breakthrough there, we're going to be looking down towards the 94.99. If we can get a break through both of these, we are looking for a third target to the downside and the next key area of support, which is the 94.39. So overall, we are looking for further declines going into next week, and we will be going into next week with a bearish bias on the US dollar index. So next market we're going to look at is crude oil. Now, we start the week above a key area of broken resistance, looking to turn support at the 46.78. If we can get a pullback, and preferably in this case, if we can get a pullback and a retest of the 46.78, this is where we're going to start to look for bullish opportunities. And we're going to be looking at initiating longs up towards the next key area resistance to the upside in the target set, the 50.31. Now, I just quickly wanted to answer a question that I got asked before the holiday period, which is this. Yes, when we have these levels, and you can see we've put this in green now to give you this as a better idea, these are secondary targets that we're looking for should the closest support and resistance level in this case start to fail. Now, what's important about this, and the key piece of information here which you need, is if price pulls back and it starts to crisscross the reference point that we have here like this does not mean you should be buying and selling every time the price moves above or below this level. Okay, if this happens, then all you simply do is you can put it into a range or into a corrective pattern and wait for the breakout in either direction, because what you're looking for is you're using this as a reference point above which we are looking for bullish patterns, and below which we must have bearish patterns in order to initiate our trades. This is what we're using these reference points for, and I think some people weren't sure that if we started to break down below here, we don't necessarily just skip this market altogether, but we do have to actually break down below and show confirmation in terms of a bearish pattern below the 46.78 that we're going to be declining to the downside, and that's when we will start to look for the secondary target, looking at the 41.85 in this case. So hopefully that answers your question for the person who asked me before the holidays how we're using these and if we are reversing our positions below here. So the first pair we're going to look at is euro dollar. Now, we start the week above the key area of broken resistance, turning support multiple times, including last week, at the 1.13090. If we can get a pullback, possibly even a retest of broken resistance, turning support at the 1.13090, this is going to be an area we're going to start to look for bullish opportunities, and we're going to be looking at initiating longs up towards the next key area of resistance to the upside in the target set at the 1.1569. So the next pair we're going to look at is pound dollar. Now, we start the week above a key area of broken resistance, looking to turn support at the 1.26629. If we can get a pullback, and preferably in this case, if we can get a pullback and a retest of broken resistance, turning support at 1.26629, this is going to be a great place to start to look for bullish formations, to start to look for bullish patterns, giving us an opportunity to initiate longs up towards the next key area of resistance to the upside in the target set at the 1.2935. So next pair we're going to look at is the US dollar Japanese yen. Now, last week you can see we had this flash crash to the downside. It wasn't just in the US dollar Japanese yen. We did in fact have this across a number of markets. That's why a number of these markets look a little bit ugly going into this week. And this was caused by two things. One was the fact that a lot of traders were away from their desks last week, and so there wasn't much liquidity in the markets to actually stop this from plunging as far as it did. But the catalyst for this was Apple, the company Apple, actually cutting its revenue guidance, and we saw a flight to safety to safe haven assets like the Japanese yen. And so this is why we saw this to the downside. We do, however, start the week below the key area, nonetheless, the 110.120. So if we can get a pullback, and preferably if we can get a pullback and a retest of broken support turning resistance, you see we're forming this, starting to form this bear flag to the downside. If we can get a pullback, preferably a retest of the 110.120, this is going to be a place we're going to start to look for bearish formations and patterns. And we're going to be looking at initiating shorts down towards the next key area of support to the downside, and the target set of the 105.65. Now, just something to note, very often historically when we have flash crashes like this, we can go into an extended period of correction, and so I wouldn't be surprised actually just to see this correct in next week. So next pair we're going to look at is Aussie dollar. Now you can see last week we had a flash crash in the Aussie dollar as well to the downside, and then we just ate all of this back up, and we actually finished back above the initial start of this sell-off to the downside, as we had the company Apple, as I said, cutting its revenue guidance. And then after that, we actually had the Fed Chair Jerome Powell coming out and soothing the markets by saying that he was actually listening and he was essentially watching the markets. And so this actually reversed the flash crash to the downside, and we start the week above the 0.70770, which is previous broken resistance, looking to turn support this week. If we can get a pullback, and preferably in this case, if we can get a pullback and a retest of broken resistance turning support at the 0.7070, this is going to be a place we're going to start to look for bullish formations and patterns. We're going to be looking at initiating longs up towards the next key area of resistance to the upside and the target set, the 0.7199. And if we can get a break through here, we're going to be looking up towards the next key area of resistance to the upside and target 2, the 0.7301. So next pair we're going to look at is New Zealand dollar. Now we had a flash crash in this pair again last week, very similar to the Aussie dollar. No need to actually go over the reasons behind this again. But we start the week going into this week above the key area of broken resistance, looking to turn support at the 0.67023. If we can get a pullback, and if we can get a pullback preferably in a retest of broken resistance turning support, this is going to be an area we're going to start to look for bullish formations and patterns. And we're going to be looking at initiating longs up towards the next key area of resistance to the upside and the target set, the 0.6790. And if we can get a break through here, we're going to be looking up towards the next key area of resistance to the upside and target 2, the 0.6841. So next pair we're going to look at is US dollar Swiss franc. Now we start the week below key area of broken support turning resistance at 0.99086. This is a great place already to start to look for bearish formations and patterns. And if we start to see those bearish formations and patterns offering us the opportunity to short this, we are going to be looking for further declines down towards the next key area of support to the downside and the target set, the 0.9702. So next pair we're going to look at is US dollar CAD. Now we start the week below key area of broken support, looking to turn resistance at the 1.35643. If we can get a pullback, and preferably if we can get a pullback and a retest of broken support turning resistance at the 1.3564, this is going to be the best place to start to look for bearish formations and patterns. And we're going to be looking at initiating shorts down towards the next key area of support to the downside and the target set at the 1.3172. Now, just bear in mind, in terms of the Canadian dollar, we do have an interest rate decision coming out of Canada next week. We are expecting, or the market is expecting, the consensus is for an interest rate rise. And therefore, generally speaking, although it does not happen scientifically 100% of the time, generally speaking, you would be looking for a strengthening of the Canadian dollar if that interest rate rise is to materialize. For TFT members, we'll go through exactly how you can trade the interest rate decisions next week. And last but not least, we have gold. Now we start the week above key area of broken resistance from the past, already turning support at the 1282.51. Going into this week, this is going to be an area we're going to start to look for bullish formations and patterns. And if we get those bullish formations and patterns in this area, we're going to be looking at initiating longs up towards the next key area of resistance to the upside and the target set at the 1304.20. And if we can get a break through here, we're going to be looking up towards the next key area of resistance to the upside and target 2 at the 1315.40. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far and also who comments on a regular basis as well. I hope you all had a nice break, as I said at the beginning of this video, and I hope you all have a fantastic week next week. The only thing left to say is take care and don't forget to trade safely.